It's great to be here to talk a little bit about our results and our outlook. We came in at the top half of the revenue guidance that we gave. We came in line with the audience outlook that we'd given for Q4, and we feel like we're set up for a strong 2022. We said that we'd grow revenue low to mid-20s and that we would grow expenses in the mid-20s. We've done some important resource reallocation to hold things to that level, and feels like advertisers are off to a big start in Q1.
When you think, though, about this buyback, which is what seems like everybody's focused on, what was the rationale for that relative to using that cash for other needs?
So we ended the year with $6.5 billion of cash. We added $1 billion in very early January from the sale of MoPub, which allowed us to focus more of our resources on the ads opportunity on Twitter. So with $7.5 billion of cash, we feel like we can continue to invest in the growth opportunities inside the company, but also return cash to shareholders. Inside of that $4 billion share repurchase, we plan to enter an accelerated share repurchase program to buy $2 billion worth of the shares in the very near term, and then to have the flexibility to buy back more over time. So we hope that we can continue to grow the company through hiring people, through building out our infrastructure, through continuing to be acquisitive, but also through this share repurchase program.
Well, that's what I was going to ask you, though, because we've had lots of conversations over the past couple of years about acquisitions, and you've been quite acquisitive, mostly with smaller companies. But does this suggest that you don't think that there's a better buy with your cash right now than your own stock?
Well, we'll still have lots of cash left to both execute on growing our headcount. We grew headcount 35% last year. We'll grow it about 20% this year. And by being acquisitive. We bought over 25 companies over the last 4 years. They're usually, as you mentioned, technology and talent. But we also have bought businesses when they've helped us accelerate our work. And we'll continue to bring that same mindset to M&A as we look at opportunities in front of us.
I was struck by this. Advertising revenue totaled $1.41 billion. That's up 22% year over year, 24% on a constant currency basis. But then total ad engagement appeared to decrease 12% year over year. Why is that?
Well, it's a sign of our success, actually, in our direct response ad formats. As you know, our brand direct response mix has been 85-15 historically. So there's a really big opportunity for us to show more direct response ads to people on Twitter and to help advertisers with what we call down funnel ads opportunities, where people are clicking to download something or to buy something. When you click on an ad, that's a higher threshold to be in engagement. And so when ad engagements are going down because of a mix shift to to direct response ads, where there's a higher threshold for it to be in engagement because you're not just watching the ad, you have to click through, there's a call to action of some sort. It's actually a sign of progress for us that the mix shift towards performance ads is working. That's why performance ads grew faster than overall ads in Q4, and it was really driven by our app install or MAP product.
What should investors take away? This is the first time we're talking to you since the new CEO has been put in place. Parag is in that role now. Jack is no longer in that role. Any difference?
Well, Parag's off to a great start in building on the success that Jack had in his time as CEO. Jack really set the strategy and put us on a great course, and Parag is building on that by reorganizing the team. We now have a GM structure, so there are 3 people who are responsible for delivering outcomes, and they have all the resources available to them to deliver on those outcomes. He's also got us more focused on metrics and doing everything we can to move faster. And that mindset is contagious across the company as we think about all the work that we have in front of us. He's off to a great start.